This is our Forex blog for May 22nd, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. This has been getting easier and easier as we enhance our tools. This is our best currency meter. It's called the Build Your Own Trend Range Bar Currency Meter. And when the markets are moving a lot, there's more bars, and when it's not moving that much, because it uses a range bar, there's not that many bars, and it lets you see the intensity. Green is when the trend is up, and red is when it's down. Anything at and above the 80 level is extremely strong, which basically is telling you that a vast majority, maybe 80% to 100% of dollar pairs are going up. And because this tool uses 5 different statistical tools, 2 of them measure the intensity, it also tells you that the intensity is high. If you have a good percentage of them going up, but with low intensity, you're going to see bars that look like this. Nothing to write home about, not worth your time trading. But when you see incredible intensity like this, it increases your odds of that trend continuing. Underneath that, we have the 15-minute trend, hourly trend, daily, weekly, and monthly. So real-time trends changed first. As you can see, most of it was in a downtrend. Got really strong right here. The 15 then switched up, 10 minutes later. Hourly, daily, weekly, and monthly are all up. So you want to buy the dollar versus the weakest one. And now we have a way of linking these range charts to a quote sheet or hot list. And you can sort it. The strongest one's the dollar. The weakest one is the New Zealand dollar. And if you, change that sort order, it puts the weakest one on top. You can also put it in a particular order. I like the dollar and yen when I'm just looking at them to see which pairs I'm going to trade the rest of the pairs against. The yen is clearly weaker. The dollar is super strong. And you can look at the other pairs and do that. But the new feature lets you sort a quote sheet like this, and it will automatically put your hot list in the right order. Strongest, second strongest, third, fourth, fifth. Actually, let me resort that because one just turned weak. There we go. So the New Zealand's the weakest, the dollar's the strongest. That means you want to sell the New Zealand dollar, and you can clearly see a big downtrend. Nice move up here, you get short, small 10-15 pip profit. Nice pullback here, you get short, somewhere around 25. Out here at 76, you made 25 pips on that trade. And you knew really from about 10 o'clock that the dollar was strongest, that New Zealand was one of the weakest, and looking for that sell. We also have a very weak yen. Most of the time I don't like to trade the dollar yen, but we're going to take a look at this right now. Dollar yen today would be an excellent one to be buying. As you can see, nice little, there's basically 2 methods that we're looking for entries. One is a little rectangle pattern like this, and the second one is a pullback trade where it makes it move up and then it pulls back. Typically you want to buy the breakout of the, you also have this is not only a pullback, but it's also a rectangle pattern. So sometimes you get a pullback, then a sideways rectangle pattern. Those are really high probability. This is kind of a wedge pattern where the volatility gets less and less and less. Breakouts of decreasing volatility patterns like this tend to be profitable. You get in. This is the last wave up. You always want to draw your fibs on the last wave. Gives you an idea of where to get out with your profit target. Notice it touched it to the pip. So you're in this trade right here at 70. You're out at 95. You made 25 pips while risking less than 10 pips. And that's one of the keys to trading. Small losses, bigger wins, focusing on the ones that are most likely to be trending. So I'm going to resort these things. All right, the pound also was strong today, so you can buy the strong pound versus the weak yen. So we're going to bring that chart up here. We're going to go over how to use our range charts to do this. And there's a bunch of trades to be found today on this. First of all, when it's above its hourly, you don't want to look for buys. You have a nice little sideways rectangle pattern right here, but the previous day's high is right here. When it breaks out from the previous day's high, you get in, and our trailing stop had you out right here at 91. Very small profit. Nice pullback to the Fibonacci area, which is support. As it starts going back up, you might have gotten into this trade. You always want to look at resistance areas. If the market can't get above them, you're better off just getting out of your trade. it's kind of chopping around here. You might have bought this breakout right here again and failed, and then you wait for the market to take off again. You know that the pound, is strong, and the yen is one of the weaker ones. You also have a nice little pattern right here, which you should be able to spot visually without drawing the lines after a while. You buy this breakout here, that shoots up about 15 pips. Then you got this nice little pullback trade right here, where you get in around 126, and our trailing stop has you out at 22. So 22 pip move. And then here you got a 3-bar pullback. The first bar that goes green, you buy it when it goes 1 pip above the high here at 22. And these gray dark lines are Fibonacci profit target levels that I draw each night. Major resistance. As you can see, there was some selling the first time this got hit, and of course the second time this one got hit. So instead of spending 30 or 40 minutes a night doing Fibonacci analysis, you can just simply add the trading zones to the chart. I do this analysis for my own trading. It only takes me another 2 to 3 minutes to upload those levels to our server. When you put this on your chart, and every night at midnight it refreshes it, gets the new levels that I did that night, and puts them on your chart. These are major areas of support if price is coming down to it. If it's above where the price is, it's resistance where there's likely to be some selling. As this is going up, anytime you see it go up with a lot of momentum, the pullback has very little weakness, it's very likely to continue. And as you get into a trade right here and you see the momentum increase and get back to the extreme 80 level, you have a very good chance of making money on your trade, which you can see it did. Once it gets to the upper containment bands, usually that's where the market kind of stalls off. And if there's any major resistance, like a Fibonacci area above the containment bands, very high probability, likely end of the move. One other thing you have to look forward to in the coming weeks is basically alerts and signals on your chart that tell you when to look for buys and sells. I don't know the ultimate whether the colors will all be red or green. Red for sells, green for buys. Right now I have different types of trades showing up with different color dots, so I can enhance and tweak the settings. But these are pretty good high probability entries, and especially when you see these big sell signals, usually you're going to get a pullback. Getting a buy signal right here, you enter when it goes a pip above that green bar's high right here at 99. Your stop should be a few pips underneath here, or use the trailing stop on the other chart, and you can see this one went up about 40 pips. You get that pullback right here, and then it went up another 25 or so pips. I'll just showcase a few extra ones of these just to give you an idea of how they work. And this should be out, again, I'm hoping Friday, maybe Monday or Tuesday next week at the latest. If you use a currency meter to focus on the best currencies, and then take these trades when the signals happen. You can see this counter trend trade here, found a move up. This sell signal right here, you get short when it goes a pip underneath that bar. Unfortunately, it came down underneath the low and came back up. But you can get out of these kind of trades with a very small loss, 3-4 pips, or even make a pip or two. You're short, and they're kind of like suggestions for trades. Really, when it's pulling up like this, you want to wait for those trend line to get broke. You go short. You can see this one here led to a little bit more profit. This one right here, you would have had a loss. This one right here, short at 68, it comes down somewhere down here, you're out 20-something pips. So you can see if you lose 3 or 4 or 6 or 7 pips when you're wrong, and this is really the worst of the bunch. This one right here, break even. This one here, 4 or 5 pips. This one here, 10 or 12 pips. This one here, 8 pip loss. This one here, 20-something pips. Obviously, these are just suggestions. You got to wait for the price to go underneath the previous bar. It never does in this case. So this signal right here is not a losing trade even. This one right here, you get short, pulls down 10, 12 pips. This one right here, right at the previous swing high. If you get into a trade here and it turns out to be a loss, when it comes up, down, up again, and fails to go higher right here, when it starts coming back down, you want to get short. And you can see this trend, came down. This is a good time to get out of your trade. It's also near a Fibonacci area, it appears. Notice when you're at the 1.382 to the 1.618 fib, and you get a big counter trend buy signal, you might want to look to get out of your trade. Very nice 40 pip drop there. Now some of your trades are going to be 40 pips, 20 pips. The other ones are going to be 8 pip losses, 5, 6 pip wins, 15 pip win, 8 pip loss, 4 or 5 pip win, 2 or 3 pip loss right here because it went underneath the low and then came back up. Wicks are very big signs of reversals. You can see a wick here, reversed, wick right here, continued. So let's take a look at some other currencies using this. And we don't have any of the other tools on here. So one of the things that I use is the containment bands. Above the containment bands, you really want to be buying. Below the containment bands, you want to be selling. I mean, not the middle hourly moving average right here. And it's usually, once the market trends up, it's usually a good idea to wait for it to come down, see if it can hold the hourly. If it starts to go back up, get in. Once it breaks the hourly, it's a major sign of weakness. So this trade right here is good. This one here is good. When it's underneath the lower band, it's much less likely to continue down. So I personally would have avoided this one. This one I would have taken. This one I would have taken. This one I wouldn't have taken. This one I would have. It didn't really pan out. And then when the market comes up like this, you're looking to short right here. That would have been a loss. This trade right here was a win. And this is, based on a lot of different chart patterns I've taught and seen and traded with over the years. And it also uses a lot of our statistical tools to only show certain trades under certain circumstances. But anytime you see a decent sized move with one of these signals, you may not get another signal because once it's above the hourly, it's looking for buys. But you can always draw your fibs on there, and usually it's going to stall at no farther than the 1.618. And this is a really high probability place to get into a trade. Once it breaks back down underneath the hourly right here, you can go short. So even though some of these signals don't work, you can use them to draw your fibs on very accurately. A lot of people don't know where to draw fibs. If you see a low of a move and then a big sell signal, the next fib target up is very likely to reverse. Now look at this, 1030 right here. This is a pound dollar. Let's take a look at the range chart here that I left running overnight. And as this hits the fib area right here, there was a lot of momentum right here, and that's one of the reasons why the sell signal didn't work. There's a lot of momentum at the time, but as it's going higher, the strength is disappearing. That's a major divergence system. Anytime the market makes a higher high or double top with less strength at the higher high or at the double top, it's almost sure to reverse. So seeing that, you would have been even more likely to sell that fib area up there. It also happens to be the 200-day moving average, and the weekly monthly trend is down. So pretty much a no-brainer sell. Let me bring that one back up. See that right here? 200-day moving average is there. It's a 1.382, and the statistical trend strength was getting lower as it went from here to here. Other pound pairs were getting less strong, and other dollar pairs were getting less weak, which is a perfect storm of a reversal when the weekly monthly trend was down. Here's the dollar Swiss. The dollar was very strong today, and again, once it's underneath when it's underneath the hourly, you're looking for sells. When it's above the hourly, you're looking for buys. This is a nice little continuation pattern right here that typically is a reversal, and when it doesn't reverse, it's a very strong signal that the market's going to go up. Here you got a nice pullback. You're not above the upper containment band. It goes up. Pullback right here, up. This one is above the upper containment band, and therefore it's a lot less likely to work. I want to put the trade on there anyway, just so if the real-time tools are out of this world strong, you can take the trade, but otherwise you can pass on it. Nice little counter trend trade signal right here. So if you were in that trade and you saw this, you know to get the hell out of it. Pulls back, 2 buy signals, and the final release version is only going to show one of them, but 2 different entry methods showed the buy here, and then you can see it went from 10 up to about 25. Pullback, small profit, deeper pullback. This is also our Elliott two-wave pullback. Anytime you have a swing down like this, let me draw it correctly here. Anytime you have a wave down, when you have a strong trend after a 2-wave pullback, it's very likely to go back up. You also have a buy signal right here, and you can see it exploded up from 9,400 to 9,440. So even if you trade during the U.S. session, catching it, even if you bought it at 9,410, it went up 30 pips. Very high probability, and it takes the guesswork out of trading, especially for traders that want to get started right away. There's a couple rules. 1, wait for the signal. 2, wait for price to break out of the little sideways range, so you would be entering right here. And 3, use the currency meter and focus on the currency's strongest. The dollar was super strong today. The yen was extremely weak, so I'll put the dollar yen on here. So earlier today, because of the longer term trend of the dollar, there were some counter trend signals at the high. Once it starts, exploding up, and it was later in the day when the dollar was really super strong. Here's your first buy signal. If you use the currency meter, you're basically just looking for buys. The dollar was strong, the yen was weak. So it went from 70 up to 80 here. Or if you missed that trade, this little pullback trade right here, you caught an easy 7 or 8, 9 pips. Now again, this is one of the examples because the dollar was so strong and the yen was the weakest, where buying it at and near the upper containment band is a little bit higher probability. The other ones, most of the trades failed near the upper containment band. That's why, everything is conditional. I want to put the signals on there. You can decide which ones to take, which ones not. If you see this right here and you get in, you see a sell signal right here, you might want to get out. You buy the breakout above here, another sell signal, you're out of the trade with a small 7 or 8 pip profit.